Okay, major medical. Major medical is the common term used for health insurance. When we think of health insurance, it's major medical. This is the one that if you are an employer under 50 employees, you do not have to offer major medical. However, that's the one benefit that employees want the most. If you do choose to offer it, you have to cover 50% of the premiums for the employer, not for the family or a spouse, but for the employer or for the employee. You have to cover minimum 50% of the monthly premiums of that individual's health insurance, which can be very costly, especially if you're a very small company. 10 employees or less can be very difficult. There are ways around it, but traditionally speaking, that is major medical, is health insurance. And so what's going to come with that is typically a deductible. Okay, so a deductible is 100% of what an individual must pay up to before the health insurance will kick in, but that doesn't mean that it pays fully after that. So think like car insurance deductibles. Let's say you have a deductible of $3,000. So say you you have an employee, or you have yourself who maybe you like to go skiing on the weekend and you get hurt, break your leg. Okay, took an ambulance ride, you're in the hospital. First thing that's going to happen is you're going to get billed that first $3,000. Okay, that's 100% on you. Then after that, let's say you had a gold plan. Gold refers to what's known as coinsurance. So there's gold, silver, bronze, there's also platinum. Gold traditionally meaning 80% covered by the insurance company, 20% covered by the policyholder. Silver, 70-30, bronze, 60-40, platinum's 90-10. Don't see many platinums these days, but that's what a platinum would be. So you have deductible, 100%. Then you have coinsurance. So let's say their total bill was $6,000 and maybe they have a $5,000 maximum out of pocket on the plan. So they paid the first $3,000. There's still $3,000 left on the bill. Then for the next $3,000, they would pay 20% of that, while the insurance company would cover 80% of that. So if $3,000, divide that by 5, that would be $600. Yeah. So let's say then there's $3,000 left on the bill. You pay the policyholder would pay $600. Insurance company would pay $2,400. So they've now paid $3,600 out of pocket for the year. Their max out of pocket on their plan is still $5,000. So any medical bills from there on out, they pay 20% on, up until they themselves have reached $5,000 of out of pocket costs, to where then 100% coverage. And then it resets every single year. So that is major medical health insurance in a nutshell. Obviously does not cover everything, and that's why there's more benefits that go along with it that I believe are very, very important to offer. But some not required to offer, but major medical, this is the one that is required to either be offered if you're a company above 50, or if you do offer it, you have to cover 50% of the premiums as an employer.